What major factors are causing the stock market to crash? What stocks am I nibbling on even during the stock market crash because they have long-term potential? Which stocks are making me serious money in this mother of stock market crashes? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone. The stock market crashed hard after the Consumer Price Index, the CPI, came out because it was much worse than expected. There was some expectations that it would even go down, and then it actually went up. The next day, we had a dead cat bounce because of the PPI, the Producer Price Index, came out, and it was slightly better. Inflation went down for the Producer Price Index by a negative 0.1. The headline number, which includes energy and food, was somewhat better, showing less inflation, but that was due mostly to lower energy cost, that the lower cost of gas. But if you looked at the core inflation got much worse. It increased by 0.4%. And that the core inflation is much more sticky. And, a person has to ask themselves, these inflation numbers are looking better probably than they should because the price of energy, the price of oil has gone down. It's in the 80s, but you wonder how long that can last. The next big event for the stock market is how much is the Federal Reserve going to raise interest rates on the 21st, which is less than a week away, folks. So we got another major event coming up. Right now, there's an 80% chance that they're going to raise it 0.75, 3/4 of a percentage point, and there's a 20% chance that they could raise it a full percentage point. So they probably should be raising it a percentage point at each of their meetings until this inflation thing shows serious signs that it's going down. And you can look up these percentages and what the odds are of how much of an interest rate they're going to charge by putting into a Google search engine Fed rate interest tool, and that will bring you up numerous sites that will tell you the percentages of 3/4 of a percentage rate increase versus a full percentage rate increase. But it's wild that it's a 20% chance that they could do a full percentage point. That's the most they've ever raised an interest rate, I think, since the 1980s. The market keeps acting like it wants to do the great flush down, okay, which is not a pleasant experience for anybody. But Apple and Tesla, those two stocks, I think they're literally supporting the market right now. Tesla, was going as high as 307 and going above the 300 mark, which is significant for it. And it acts like it wants to break upwards. And this is during a crash. So it's just incredible. I think they're recently around 302, but it's the battle at 300. And Tesla is putting up a valiant fight. And you never want to underestimate Tesla. Apple, again, it's hanging in there better than anyone thought that it would. And I think these two giants, Apple's come down, it goes into the 150s, then it breaks into the 160s. It's 160 is kind of where the battle line is. If it's below that, it doesn't look so good, but it's trying to go forward. But I think the crash is going to be too much for it. But I think we're going to have the opportunity to add to our holdings in the near future. So I have a watch list of stocks. I've talked about them in previous weeks on this channel. And I'm looking at this watch list and noticing which stocks are not going down very much or are even going forward in this situation. And I'm nibbling on them. I'm accumulating, as they would say, because even if they do go down more, it's a little bit uncertain, especially with these smaller stocks. And I want to have bought them at a good price, even if I don't get the full bottom. It's easy to miss the full bottom, so I'm nibbling on them. I'm not going all in, but I'm nibbling on it to start a position or to add to a position that I already have. One of my favorites is Super Microcomputer, symbol SCMI. It's a computer equipment maker. It has a price to earnings of only 10, and its earnings growth rate is an excellent 38%. So again, this is the kind of stock that's been holding up, and this has been holding up or going forward in this crash situation. And I think you have to find small stocks that are somehow avoiding the crash. A stock that I will probably buy a small amount of is Mercado Libre. I've known this stock for a long time and I've followed it. And there's other companies that are trying to be uh, the Amazon of their particular area of the world. There's Coupang, that's COUPANG, in South Korea. That they are just like Amazon and they're excellent, but their price has fallen off badly. There's C Limited, which is more or less the Amazon of Southeast Asia. And again, its price has gone down badly. And these two were supposed to be the more certain of the Amazon-like companies. And Mercado Libre a year ago was seen as the big risk, okay? But wouldn't you know it, the stock market picked Mercado Libre. And maybe it's because it has more growth potential in Latin America. It has an outstanding earnings growth rate of 45%, but its price to earnings is way too high. It's 91, okay? So my thought with this is to buy a small amount and just so that I follow it and am more invested in looking at it and then seeing if that price comes down to a point where it's worth buying more of. What I've found is that the earnings growth rate usually trumps the price to earnings. That Tesla has been massively overpriced for years, and its price will keep going up. And if you don't own Tesla now, you're going to get an opportunity to get it cheaply here, I think, sometime in October. This is not financial advice, as I don't know your personal situation, but it might be something that you may be interested in. And I was reminded of Mercado Libre, MELI, because they recently were in the news because they bought 500 electric vans because they wanted to improve the environment. They're very close to my heart when they do stuff like that. And then there's AHER Test Systems. Its name and symbol is AEHR. This has been an excellent company to own the stock of. It's been hanging in there and even going up during this market crash. Its earnings growth rate is 41%, which is excellent, and it has a price to earnings of about 19. This is a semiconductor equipment maker. They make the equipment so that the companies can make the chips. I'm also nibbling on Centrus Energy. That's CENTRUS, and its symbol is LEU. LEU. And they supply nuclear fuel for nuclear plants, some nuclear plants are being reactivated, and there's a movement towards wanting to have more small modulated reactors, which are only a tenth the size of a nuclear plant. So this is a stock somewhat for the future. So it's a gradual buy-in, but it's an undervalued stock. Its price to earnings is only about 10, and its earnings growth rate is a solid 25%. So I think this is something that I'm nibbling on and seeing where it goes in the future. LEU's price to earnings is closer to 12, I should say, but with that good earnings growth rate of 25%, it's still undervalued. And then there's maybe my favorite, Pilbara. That's Pilbarra, Pilbara Minerals. Its symbol is PILBF. They're a lithium miner. And the story is that there's all kinds of money to be made in lithium mining, especially with the use of electric cars. And this is a stock that has a price to earnings of only 11, and its earnings growth rate is it's over 50%. And then you get the added feature that it's only around $3. What more could you want? So now you want to hear the good part. Where's the serious money to be made in this crashing market now? Because I've finally figured out how to, or at least have the tools available to short the market the easy way. This was not available in my youth, let's say. And you learn something going through 5 or 6 major crashes in your life. About the fourth time, you start doing things to offset it. About the fifth time, you start doing things that you actually benefit from it. And when the sixth time comes around, this time, you're just waiting for it because now you know what to do. Okay. And what has been the big win this year has been SQQQ. The triple leverage inverse fund on the 100 largest companies on the NASDAQ. I keep trying to build a portfolio of stocks to hold for the long term, and I'm doing that even now, but I'm nibbling. And there's stocks that I believe in for the long term, and I'll nibble and hold those nibbles until I can add to them meaningfully when the market fully crashes, which it will do. Jeremy Grantham, I've featured him in previous videos of mine. He says that we're in the super bubble of all time, and it's unwinding. Michael Burry, who called the 2008 great financial crisis, he says this is going to be the mother of all crashes. And it looks like they are onto something and appear to be at least partially right. And I think they'll be shown to be right in a major way. Yang, Y-A-N-G, is a triple leverage inverse fund on Chinese companies that trade on the American stock exchanges. China has been crashing for a while now. And when the United States stock market crashes fully, China will do even worse. So I believe in this triple leverage inverse fund on the Chinese companies that trade on the American stock exchanges, Y-A-N-G. When Jerome Powell increases the interest rate by 0.75 on the 21st, and he might even do higher, real estate's going to crash even worse than it's been crashing. It's started to come down significantly, but it hasn't taken the big swoosh. And I think it'll be a gradual, more gradual than the stock market anyway, a gradual coming down of real estate prices. I expect at least 10%, probably 20%. It won't be as bad as China's crash, but it'll be noticeable. And I'm using DVR, which is a triple leverage inverse fund on the real estate index. So that's been making money, and it will continue making money for me. And then we have this weird situation. I'll tell you why this situation in particular with gold is weird. I was always taught growing up that when you have inflationary times, the price of gold goes up. But that's not the way it's working this time. I think the difference is that the United States dollar is so strong. And as we raise our interest rates, the more we raise our interest rates, the stronger the dollar becomes. And you can think of it this way, the reason the price of gold goes down is because each dollar buys more gold, okay? The price in comparison, it takes less American dollars to buy the gold than if you were using any other currency. And so as the dollar gets stronger, it takes less of those dollars to buy the gold. And so that's why you get this weird effect. I found that it's probably best to short the gold miners. And so there's an inverse, double leveraged inverse fund on gold miners, and its symbol is DUST, D-U-S-T. I guess it's like gold dust, okay? So D-U-S-T, double leverage inverse fund on the gold miners. It's something I haven't done before because it wasn't my religion before, but now I can make sense of it, and it's all due to the strength of the dollar. And then I'm doing VIXY, V-I-X-Y, which is a futures contracts on the VIX, which measures the volatility of the S&P 500 predicted a month out. And in a bear market, the VIX tends to increase, and so you benefit as the VIX, as the volatility of the market of the S&P 500 goes up. You make money off that index. It's a short-term contract on the S&P 500 VIX index. Its symbol is VIXY. So I'm having days where I'm making up to 42,000, and that's due mostly, of course, to SQQQ and to DVR and to DUST. Those are the major ones. There's some contributions from the other ones, but mainly I haven't really lost anything that I'm nibbling on because enough of them make money to make up for any losses with the others. So that's working out pretty well. And that's, like I say, that's more of a long-term thing. I'll be so happy when the bear market ends. This is the hard way to make money, and it's much more nerve-wracking and stressful. It just is. Be sure to like and subscribe if you haven't done that already, and hit the notification bell if you want to be notified of future videos. Good luck to us all. We're in for a choppy ride. We have to get a hold of this inflation monster before it eats us. And I think we will. It's just, we have to go through this. It is good news that the war of Russia's invasion of Ukraine is going well for Ukraine. And I think that situation could turn out to be beneficial. But right now, it's actually making things worse in the short run, but it could dramatically change, and there's signs that it is dramatically changing, so we need to keep an eye on that too. Thanks for listening. Bye-bye.